Well, good morning. Happy Friday to you. I'm Marlon Bowling, your tour guide to the ag commodities. Well, we're coming toward the end of our trading week already, and kind of an exciting day. For one thing, normally Friday would be just kind of a ho-hum trading day as far as information, but not this week because we had a holiday on Monday. That means today we got our weekly export sales numbers out, and they came out just moments ago. Let's review what we had for the weekly numbers this time around, and then we'll get some comments on what we're actually seeing. So we had corn exports last week. These are sales, I should say. 1.22 million tons. And you had soybeans at 986,200 tons. You had wheat at 508,100 tons. One thing I did want to point out, and I thought it was pretty significant here, look at the soy meal sales last week. Wow, 362,500 tons of meal. Now, we only had 700 tons of soy oil sold last week. And then flipping the page to grain sorghum and cotton and rice, big sales of grain sorghum last week, 189,000 tons. Usually it barely registers. And on cotton, we had 236,300 running bales. On the rice, we actually had net reductions last week of minus 5,600 tons. Now, we also had an overnight export sale announcement that just came in off the wire a little bit ago, and it's a sale of soybeans that came in overnight, 220,000 tons to unknown destinations. We don't know where they were sold. And here to talk about all this, I want to welcome aboard Brian Hoops, the president of Midwest Market Solutions, and we'll chat about what this all means here to the trade. So overnight, we had kind of a meandering market in the Globex trade, Brian, but now with all this new data that came out here this morning, now what do we do?
Yeah, good morning, Marlon. These are some supportive numbers, I thought, all the way across the board. Corn was an 8-week high above expectations. Soybeans were a very decent number. Wheat was a decent number. And then you pointed out the soybean meal. That was well above expectations. So all in all, a very good export sales report. If you look at some of the numbers a little bit closer, we had China showing up as a big buyer for U.S. soybeans. And most of it was in the form of switching from the unknown destination category into Chinese allocations. And that's kind of going to be key, as this week we've seen a couple private export sales, including this morning. There was a sale earlier this week, and both of those soybean sales were to unknown destinations, which the trade wholeheartedly believes will end up being switched over to China. Now, I do believe that China's going on their lunar holiday next week, so there may not be a lot of activity out of China. But again, maybe this unknown destination pops up from time to time, which would be supportive to our markets. So good to see these demand numbers for all the way across the board for corn, soybeans, and for wheat. As we go forward in here, there was some reports from the Buenos Aires Grain Exchange overnight that the corn condition ratings now down to only 3% good to excellent, soybeans down to about 5%. We really can't get much worse of a corn or soybean crop out of Argentina. And in fact, the rains that are starting to fall should help stabilize that crop, but there's certainly damage that has been done in parts of the country, and there's already talk or reports that they're shipping soybeans into the country from Brazil. There's about 3 cargoes on destination.
Well, in the corn market overnight, we had the March corn, with these quotes provided by bar chart, down 1 3/4 pennies. We were at 675.5. December was down 3/4 cent at 595.5. Now, on soybeans, in the Globex trade, March was up 1 penny at 15.15 3/4. You had the May contract just 1 tick higher. And in new crop November, we were actually down 2.5 cents at 13.62 per bushel in the overnight trade. On the wheat in Chicago, March down 2.5 at 7.32. In Kansas City wheat last night, we had the March down 3 at 8.29. And on spring wheat in Minneapolis, we were actually down 3/4 at 9.03 1/4. We'll come back and talk about the beef and pork export numbers. Maybe surprises there too. Let's take a look when we come back. Well, we talked about the healthy grain export sales that we had last week. All right, let's take a look at the livestock side. They have been lacking here lately. Let's see what went on. On the beef, we had a total of 17,300 tons for 2023. And on the pork side, Well, they're back at it again. Look at this, 34,100 tons. Let me dig a little deeper here. On the beef, we had, well, the key buyer was actually China, 4,800 tons. And on the pork side, the key buyer was Mexico. They bought 11,800 tons of that total. But China was in there for 4,100 tons. So they bought almost equal amounts of U.S. beef and pork last week. Nice to see them back in there, Brian, as a buyer of both meat products here last week. Now, do you think this is just kind of a last-minute surge or hurrah before they get into their Lunar New Year celebrations when they just kind of shut down for a couple of weeks here?
Well, yeah, it certainly might be, and we may see, some trickle down type sales as we go forward in here. One thing about the beef sales is it seems like these are kind of routine numbers, but they're actually the highest weekly total since last September. So we're seeing kind of a surge in beef sales, which is badly needed, I think. We're having a kind of technical correction. Cash market's lower this week. So it's good to see that at least the exports are improving, and hopefully they will improve going forward. But as you mentioned, China going on holiday, that's going to slow their buying. We'll need to see other foreign buyers step in a little bit, especially countries like Mexico, South Korea, Taiwan step in and help support us during the time where China may be absent next week.
All right, so let's take a look at where we finished up here on the board yesterday, and then I want to talk with you about our livestock summary too. Yesterday we were weaker on live cattle. April we're down $1.10 at 159.12. On the feeder cattle market yesterday, we ended up the session with the March down $1.62 at 180.10. But if you look at our livestock summary from yesterday, we did have a little more active trade. And it looks like prices generally on a live basis and dress basis, Brian, were going to be weaker than what we had last week. So does that foretell more pressure here on the futures?
Well, I think we could see a little follow-through selling here on the opening, but then some short covering probably is going to develop with the cattle on feed coming out this afternoon. Cash news is probably pretty well digested by now with the losses that we saw earlier in the week, especially yesterday, as we were down fairly decent in February, April, and some of those summer months. But supply is expected to remain tight. It was a little bit of a concern that the cash market backed off in here. Do expect that we'll see a rebound in the cash markets next week, but the key is always is the slaughter pace. The slaughter is coming in slower than expected this week. They've dropped that pace down. We're still looking like close to 650,000 head, but not the 660 that was expected earlier in the week. And so once that kind of news kind of started to become available, I think the futures weakened along with feedlot expectations, and that pulled us lower. But depending on what this report says this afternoon, looks like we could be back moving higher again next week.
And just as a point of reference, yesterday on the lean hog futures, we wrapped up with that April contract down $1.80 at 84.40. We'll see if they bounce back today. Brian, great information. Thank you, sir. I appreciate it. You have a good weekend. Brian Hoops of Midwest Market Solutions. So, Tammy, with that, we're about ready to kick off at the bottom of the hour.